With home prices and interest rates going up, people are often asking, should I wait to buy investment properties until a better time to buy? My good friend Peter Skaggs with Innovative Mortgage took on that question and put together a presentation that clearly and expertly answers it in a way better than I've seen anyone answer it before. When I saw the value of his presentation, I asked him if I could share it on my website. He graciously agreed and put together the following video.
Have you said this recently? Interest rates are too high, I'm going to wait to buy. Or maybe you've said home values are too high, so as a result you're going to wait to buy. You think that the market's going to crash, or you believe that interest rates are going to come down. Well, that's what I want to address today. Is that the right decision? My name is Peter Skaggs. I'm the owner of Innovative Mortgage Alliance. I've been investing in real estate for 16 plus years. I've owned Innovative Mortgage for 14 years now. I own 15 single family homes plus a couple apartment complexes plus some commercial real estate, one of which is the building I'm standing in right now. And I've helped literally thousands of real estate investors buy rental properties. I've assessed lots and lots of rental real estate. And so I believe I am fully equipped to help answer that question. Is now the right time? Should I wait for interest rates to come down? Should I wait for home values to come down? Here is my contact information, and I'll show this again to you at the end. So what I want to do is I want to go through a calculation. This is an Excel spreadsheet that I've set up just for our purposes today. And I want to set up a scenario here and evaluate it with you very, very quickly. So I went out to the MLS and I started looking at properties for sale. And I looked in the Provo, Orem, Pleasant Grove, American Fork area. I liked this one here because it's a good price, bottom of the market, $375. I like that it's 3-bedroom, 1 bath. It's in Provo, and they've recently reduced the price. That means they are open to negotiation. So looking at this property, I like what I'm seeing. The house is fantastic find with unbeatable location, beautiful hardwood floors, new roof, spacious corner lot. It's a perfect place. You know, it's close to BYU. Number of boxes that it checks for me. So I really, really like this. So what I did is I set up this property inside of my property evaluation form. So I've got it in here at $375,000. Then what I did is I went out and priced this. I did it as an investment property, not moving in. If we were to move in, we could reduce the down payment, reduce the interest rate significantly. But I wanted to show you kind of as from an investor's perspective. 20% down, I did a 7.25 interest rate. You see there's the monthly payment of $20.47 again. So what we've got is a purchase price, $375. We're going to do a loan amount of $300,000, $75,000 down. I went out and looked to see what things were renting for. 3-bed, 1 bath, $2,200. 3-bed, 1 bath, $2,175. 3-bed, 1 bath, $2,200. Maybe these are a little more finished than mine is, but that doesn't look like it's tremendously better. So maybe it's a little better, but it's probably going to be able to rent for right around $2,200. So that's what I put in right here. Property taxes came right off the MLS listing. If you see right here, $2,133. So I've got $2,133 in here for property taxes. $2,133 divided by 12, $178. Insurance, I don't know what it's going to be, but it's probably going to be about $700 annually, so about $58 a month. So I've set up my insurance. So I've got a total cost there of $236. If I wanted to go in here and put property management in, I could and should. Jeff Stinson at Castile Property Management, that's who I would use for a property management fee on a monthly basis. So I've got $456. I'm gonna set money aside each and every month for vacancy and maintenance. I usually set aside 5% of the rents for vacancy and maintenance, so about $220, 10%. And then I have this in here that does an adjustment, but it looks like we're gonna be at about 25% of our rents going to our expenses. So I look up here and I say, okay, cash on cash return. is a negative $523. Peter, that's why I don't want to invest in real estate right now. That interest rate's too high. The purchase price is too high. Negative $523. That means out of my pocket each and every month, I'm going to pay $523 based on these numbers that I put in here. Let me show you this. This is step 2. What I did is I came in and put in the parameters. I know that Jeff at Stinson's going to increase rents. Good Property Manager is going to increase rents probably by 3% annually. So I put in a 3%. Appreciation rate, I got that from right here, 4.63. This is from the Neighborhood Scout. That's since 2000, so it's 23 years. It's about 4.63%. So that's what I've got here, 4.63%. And then inflation, I went out and looked at inflation rates. Inflation rates, 2023, it's about 5%. That is across the United States inflation rate, so I punched that in right here. And then I don't know what your tax rate is, but I suspect it's in and around 30%. Could be as high as close to 40%, whatnot. But I put that 30% in here. So I set up the parameters here for my property evaluation form, and you'll notice right here, cash flow analysis. And we know this, we're negative $476 annually. That's a negative 7.6%. If you adjust for inflation, it reduces that a little bit because the dollars I'm spending today are worth less a year from now. And you'll notice though that each and every year it's getting better. It's because our rent increase is going up by 3% each and every year. So again, is this the time to buy? Wow, I'm going to be losing money each and every month or each and every year. Are you really though? Let me show this to you. So if we go and look, we got 4 pillars of wealth building when we own real estate. We've got cash flow. We're obviously negatively cash flowing. We've got principal pay down. We're not paying our mortgage payment, or at least most of it. We have our renters paying that for us. Tax savings. You're going to get tax benefits like depreciation, and then appreciation. The value of that property goes up over time. So if I show you this, here's that negative cash flow that we've already discussed a few times. But ultimately I have principal being paid down each and every month. I also have a tax savings. This tax savings basically is depreciation over 27 and a half years. That's what you get on residential real estate. I adjusted to take out the lot. So I've got 80% of our purchase price, appraised value, 80% of that divided out by 27 and a half years. And then I've got that at a 30% tax rate. So you would be actually saving $3,200 every year out of pocket. So that plus the principal pay down has already covered your cash flow. And then you have appreciation. The value of your home historically is going to go up 4.63%, $17,000 in year 1. So you're going to have a total combined return of $18,197. That is a 24% return on your money in year 1. And you notice what happens year over year. I mean, we're hitting 30, 33, 36% return on your money year over year. So would you buy now? Of course we want lower rates. Of course we want a lower purchase price. But the reality is you are not going to get a better return on your money than you will in real estate. There is no stock market investment that you could make that you're going to get a 24% return and own a tangible asset. There is no crypto or whatnot that is going to do these kinds of returns over time. We absolutely want to buy real estate right now. If I show you this adjusted for inflation, yeah, it brings it down a little bit, but ultimately it's still, that $18,000 has the buying power of $17,000 a year from now. But ultimately it's still a 23% return on your money. So the other thing that I want to show you here is this is what we estimate the value of that home. Again, it started at $375, so it's going to be worth $392. Your monthly balance is going to go down over time, so that's what you're going to owe after year 1. you're going to have $95,000 of wealth built into that balance, available to you. If you were to sell the property, if you were to pay it off, if you were to refinance, you have $95,000 of equity there. Adjusted for inflation, it's $91,000. So that's what I wanted to show you. I think you can see that in real estate is a fabulous, amazing, wonderful investment. And when is the best time to buy? Well, as they say, the best time to buy real estate was 20 years ago. But the next best time is today. Don't wait for lower rates. We're dating these rates. If rates come down, when rates come down, we'll refinance. In the meantime, you have earned $18,000 in wealth if we're to take a year to get to refinance and drop that rate. Maybe it's even longer. You would not have missed out. If you wait, you're missing out on $20,000 per year of wealth that you could be building simply for owning that property. My name is Peter Skaggs, and I own Innovative Mortgage Alliance. You can reach me at this contact information. If you scan that QR code, it will take you to my calendar, and then you can schedule an appointment with me there. I'd love to do an assessment with you and see if investing in real estate is the right decision for you. If you want to buy a primary residence, I can also show you why now, even though interest rates are a little higher, now is the right time to buy. We have 0 down programs, 3% down programs, 3.5%, 5%, you name it. We've got access to all sorts of amazing programs.
Wow. Thank you, Peter. What an amazing and valuable presentation of information. I've always been impressed with Peter's knowledge of the real estate industry and his desire to share that information with other people. I think a couple of the most eye-opening things that Peter taught is how even when a rental property has a negative cash flow, it still outperforms other investments. I really loved how he showed how expensive it can be to wait to buy an investment property until that perfect time. On Peter's website, you'll not only be able to learn about mortgages and investing in real estate, but you'll also be able to learn about lifestyle assets, something very few people truly understand. If you found this video to be helpful, please visit our website, www.castileproperty.com, to see other videos and helpful tips for landlords. At Castile Property Management, we do more than just watch your rental property. We protect it, cultivate it, and help your investment grow.